Hello everyone. Today I'm going to talk to you about building a business versus building a property portfolio and why you should do both. Now, obviously, people have passion, hobby. Some people build business because that's a passion. They build from one to another entrepreneur. But some other people build a business because accidentally they come into doing these things, making tons of money, and then they decided to do it full time, which is how I became my property business. So whichever way that you do it, building business is great because when the business gets bigger, then it generates an income. You can look after people, you can employ people, and makes money, help the society. It's all great. And why then should you build a property portfolio as part of the strategy instead of single loan for the business? It's because any business, any sectors undergoing changes. Give you an example of graphic. You have the used graphic, they hand drawing long time ago. And then you have the digital, you use the software to draw whatever, design whatever. Now you got the AI in any sector. There'll be changes driven by technology. They change driven by the economic. There were changes driven by politics. For example, property sector was driven by a lot of the politics changes for the power, Labour, Conservative, whoever on power. They will make some changes in what they think that it fits. Then environmental changes, some of the sector would have disappeared eventually, and some of the sector will be really, really growing, like, for example, energy, the car manufacturing, and for whatever coming out, the electric cars. So any sector undergone changes. Because of the changes, if you only have a business, even if it's profitable right now, and maybe profitable in the future, you might have issue about cash flow, temporary shortfall when you need to grow the business. And growing the business from 0 to 1 million to 1 million to 10 million, there are different challenge facing business owners about how should they fund the growth and where the cash flow come from and how can they increase the sales and how big the team should they recruit to build for the future growth. If any time when you're running the business and you have a shortfall of cash, of course you can raise money, you can use your own savings. However, there is a much better way. Now, this is when the property come in. As we know, a lot of people know, the better time to buy a property is 20 years ago because the shortage in accommodation, shortage in property. In the UK, 20 years ago, you can buy property without putting any deposit in. It's very cheap. The bank will fund it, and you can have same day with mortgage for the difference for the market value. If you buy a house at the time, say £5,000, but you can actually negotiate down to £3,000. So then you got £2,000 of difference, and you may think 2,000, that's cheap. Yeah, 20 years ago, if you look at land registry, if you look at sold prices in Rightmove, you see very, very cheap. I bought a couple of houses that I paid for over 100K. The owner paid only £2,000 for. Honestly, my solicitor we're signing papers. My solicitor was saying, Vanessa, you may like to know, yeah, your seller only paid £2,000 for this house. I said, what? But at the time, I either sign or not sign. I can't go back to negotiate anymore because we get to this point too far gone. So for property investing, 20 years ago was the best time. You may have missed it unless you are young people. And if you're like my kind of age, similar age, when we were 20 years ago, we would have a job. We would have been able to afford it and would have been able to buy a house much cheaper than today. So, but we might have missed it and we didn't buy any, we didn't know enough about it. But you know that the price 20 years ago compared to today, you probably triple, 4 times, 10 times, however much higher. And now if you have buy a house today, the value of the property would definitely gone up 20 years later. population we have gone up with all the immigrants into this country, and whatever the economic changes, whatever political changes, the one thing is certain, there's always shortage in the UK for the property, and the rental will gone up and the property price will gone up. So property is one of the best strategy for any rich people who have made the money as a safe investment. So say if property price continue going up, or even property price crash at some point, if you are a professional property investor, you know how to buy a property without using any of your own money. You also know how to raise finance to pay for it. So you buy a house without your money, which is 100% return on investment, and you use someone else's money to invest. So whatever interest you're paying, you are still getting the cash flow. There are 4 ways to make money. You're getting the cash flow, you're getting the capital appreciation, you're then getting the value increase. You can buy below market value. You make money 4 times, 4 different ways from one property. When the business have a change in the circumstances, need some money, cash flow come from property, help easing it up. When you need a large amount of money for expansion, expand to different market, diverge your business, or set up a new branch, you can remortgage your property portfolio and use that large lump sum either through bridging or secure loan or remortgage to pay for the expansion. Can you now see there are 2 really big, really good partners? Business brings the cash flow. You use the cash flow from business when it runs really well to buy property. When business are under challenges, the income from the property help funding the expansion, the shortfall of cash flow, so that you both are win-wins moving forward. It's safe, it's beneficial, it's risk reverse. So if you are a business owner, and if you're doing business really well, and if you've got savings from your business that you don't need to spend, instead of sitting in the bank thinking about, I need 3 months, 6 months, 12 months, 3 years cash flow. The money just sit in the bank doing nothing for the sake of you might need it at some point. It's a better way for you to invest that money in property, because if you do need the money at some point, you can just abstract the money like that. If you take a loan for a property, secure loan, you could get the money in within a week. And if you do remortgage, you get the money in a couple of months. So it's not like you have to wait forever to get it. And if you sell the property, if you don't want to keep it anymore, you want to sell the property, you can pretty much get rid of it in a couple of months, providing that you're not overpricing your property. So the money you invest in property is still your money. It's good money. It's growing money, because once in the property, it keeps the value, bring you cash flow, bring you capital appreciation. And if you can do it up and you add value and you make more money. And if you don't do that, just leave it that it make money. So providing that you buy the property in the right location, you have the right skill to do it correctly. Same as business, obviously, any business, you got to learn how to do it. You got to have the right skill to run it, to be successful. You got to have the right team. But for the property, it's much simpler than running a business, in my opinion. It's much easier. You just buy it, the team, your power team sort it out with all the legal and everything. And you can have someone fully manage your property without you having to get your hands dirty. It's much more difficult until you build a business to a certain level to be able to run it automatically. So I hope you found useful. And if you are a business owner, you are interested in investing in property, but you don't know how to do it, or you don't have time to do it, and you like some help, you like to find out how we can help you, we do have done for you property investing strategy package that we're more than happy to help you. We will fund you the property. We will set it up for you. We use high cash flow strategy like the corporate-led, the company-led strategy. So you're getting paid clients like a hotel rate instead of single-led income, which is usually 3 to 5 times more than your single-led income. We will manage the property for you. We run it for you. and it's still your property, your cash flow, your capital appreciation. So it's like, if you like what you hear and you want to find out a little bit more, you can either join us in the in-person event where we share how we do the run the business, how we can help you, and what kind of business strategy we do, and what kind of income you will be getting. Or you can join our online webinar and find out what kind of mistake to avoid and how you can scale your portfolio using our business model. Or if you actually simply wanted to talk to someone else and find out a little bit more, you can book a 30 minutes one-to-one with one of our team. We're more than happy to talk to you. I hope you found today useful, and thank you very much for watching.